All right. Good evening. Good evening. I'm glad everybody is here. We're going to get started in just a moment. Okay. I want to make sure we're good. As you come on, let us know where you are located. I want to thank everybody for being here. I'm so excited. I wanted to come on and give some important information because basically a lot of people have been calling me. Business owners, they're being audited left and right, and they're trying to figure out what is going on. They're panicking at the last minute, trying to get their taxes together. So I want to come on and share some information with you. I'm going to give you a little bit about my background so you can know exactly who you're dealing with in case those who do not really know me, I want to give you some information. So good evening, Charles. Guys, I want to thank everybody who's watching right now on Facebook, everybody that's watching on YouTube and LinkedIn. I want to thank everybody who's joining us. Thank you so much for being here. Hi, Rocky. How you doing? I want to thank everybody for being here. We're going to get started, guys, in about 2 minutes. In 2 minutes, we're going to get started. I want to make sure that you go ahead and take some notes. And normally, like I said, this course or training that I go over, I charge money for this, but I just wanted to come on so you guys can understand what we train when we deal with our TIFIS wealth creators, and what is TIFIS wealth creators, and what do we give our partners when they become a wealth creator? What kind of training do they get? But I really want to go over this information. So we're going to get started, guys, in about 2 minutes. I'm going to be talking about why business owners lose their bona fide tax deduction, what you must do to protect yourself, and also, I might throw in some other extras or whatever. I'm not going to be long tonight. I just wanted to come on and give this information. I'm striving to do it in 30 minutes or less, so I can make sure that everybody that's watching from the various social media outlets, you get some good information. You don't sit up there and go to sleep from your butt getting on. So thank you, Stephen, for joining us. Thank you, Ken, for joining us. Guys, go ahead and hit the invite friends button. I'm going to invite some friends and let them know this is some of the things that they really, we invite people to basically a lot of things that go on Facebook and other stuff. But I would definitely say invite some people that need this information and that will help them legally, ethically, and morally stay audit proof, because that's exactly what I'm doing right now. I'm inviting some of the friends. That's what I'm doing to let some people come on. So if you just joining us, thank you so much for joining us. We're going to get started in 1 minute. 1 minute, we will get started. Okay. So I want to make sure. All right. So I invite some people. Okay. So we're going to get started in about 1 minute. Go ahead and grab pen and paper so you can take notes. And I'm just going to go over some information with you, introduce myself. For those who don't know me, I want to thank everybody for coming on here. And I'm going to just give you some information tonight, and if you want the rest of it, I'm going to direct to you where you need to go. Okay, so let's go ahead and get started. Mr. Davis, I want to make sure that I get Vincent. Can you see if you see the planner in there, like my appointment book? If it's in there on the desk, it's black. Thank you. Okay, so guys, listen, my name is Jean Davis. I am the founder and CEO of the Institute of Financial Freedom and Investment Solutions, located right here in Mapleton, Georgia. I am an ex-IRS auditor with over 20 years tax and financial experience. Thank you so much. And like I said, over 20 years tax and financial experience. I've been featured on Good Day Atlanta, Good Morning America, CBS News, Fox 5, countless radio stations, WRFG, WAOK, V103, my big brother, Derek Bozeman show. Those who know him, I love him. And so many countless radio stations, countless, TV shows, and growing. And what I normally do, guys, yes, people ask me all the time, do we own a tax company? Yes, we do. We do tax in all 50 states. But also, too, guys, we're more than just a tax company. We're a tax, finance, and wealth creation company. We show people how to lower their taxes, get out of debt, increase their finances, and build generational wealth. So hopefully that gives you some information about who I am. I've worked with Fran Tarkenton. I work with Jack Zufeld. I work with Danny Glover. I work with Ken Rothness. I can go down the line of people I work with, trained CPAs. Yes, I train CPAs, lawyers, accountants. I get contracted out to educate people about the tax advantages of owning a business, how to be audit proof, what you need to do to protect yourself. I do workshops and seminars on this matter. As a matter of fact, we have a 3-day conference coming up, Tiff's Tax Max. That's going to be a highly intensive tax training that goes over basic, intermediate, and advanced tax strategies. Want to say welcome, Stan Williams. Welcome for Miss Felicia Paul. Paul E. Dunn, welcome, brother. Good to see you all the way in Texas. James Darren Cunningham, welcome. Those who Rocky, I think I said welcome to you. Stephen, welcome. Want to welcome everybody here on Facebook, here on YouTube, LinkedIn. Thank you guys so much for watching. Let's dive into it. Okay, so I have a lot of people that's reaching out to me via YouTube and Facebook and other areas, and they're being audited by the Internal Revenue Service, and they're like, okay, and as well as the state. And they're wondering, like, you know, I don't know what to do, Gene. I just really don't know what to do. And they're time crunched and they're nervous. And this is the reason why tonight I'm just going to give you some very basic information. But guys, I did a big training on this in the back office of the wealth creators. There's a lot of information back there. That's the reason why I say you need to be a wealth creator, because this type of information, this is what we give our wealth creators, because we want to make sure that you keep the money you earn, because it's not about how much you earn. It's about how much you keep. Absolutely. So we want to make sure that you're able to keep your money. I've worked with millionaires, multi-millionaires, 100,000aires, you know, whatever you want to name. And it really doesn't matter, because I've seen millionaires lose millions of dollars because they did not keep their timely and accurate records, as well as those who 6-figure earners or 5-figure earners or whatever. It's the same thing across the board. So the first thing that I want you to do, number one, when it comes to building your business, I want you to make sure you think like a prosecuting attorney. You know, prosecuting attorney, you have your calendar. This is Exhibit A. Exhibit A states my appointments, it has my dates, it has my times, you know, whatever I say I'm going on in this book, it should be notated. If I flew to Texas to go visit Paul, I should have a ticket or something to show that I flew to Texas. And I'm going to go over some different examples of what the IRS look for. And I hope you guys really, really understand that this information, I charge for this, but I'm giving you this information because I've been getting a lot. It's always happened this time of year. I get a lot of phone calls from people who they start spazzing out, because normally when you file your taxes 18 months later, let's say you file 2016, 18 months later, the IRS, if there are certain things set off, whatever, sometimes it can be a random audit, sometimes you can be picked, but sometimes it can do with your social. Is various different ways that they do it. But if you're not keeping timely and accurate records, guys, you know, then guess what? You're going to lose all of your bona fide tax deductions. And then when you're audited, you might end up owing thousands of dollars. And guess what? They're going to attach interest, penalties, fees, extra taxes. Is going to be added. So let's be smart about our business. Yes, I know we're grinding out. We want to earn some great money, but let's talk about how long should I keep records? Well, I'm going to read some things to you. The length of time you should keep a document depends on the action, expense, or event which the document records. Generally, you must keep your records that support an item, of course, deduction or credit shown on your tax return until the period of limitations for that tax return runs out. Okay, period of limitations is the period of time in which you can amend your tax return to claim a credit or refund, or the IRS can assess additional tax. The information basically, guys, below, and it's a little chart that I have right here that break down the statute of limitations. Now, here's what I want to let you know with that. You could keep your records for 3 years. If situation 4, 5, 6 do not apply to you, keep your records for 3 years from the date you file your original return, or 2 years from the date you paid the tax, whichever is later. I can go on and on. It breaks down 7 different components. I'm not going to do that. I'm going to tell you, keep your records for 10 years. How about that? Keep your records for 10 years. You need to use a company it's a company out there. I think it's called Total Recall, something of that nature, that can keep your records off from your office, from your home, that you don't have to, it can store your information. And now with modern technology, they scan your information and do it, digitize it for you. So you don't have to worry about if a fire happened, if a flood happened, the dog ate it up, the cat peed on it, whatever the case may be. The IRS do not care for your excuses. They're not going to accept your excuses. They're going to say, okay, well, you're going to lose it. The first thing also I want to say before we go into what kind of records you need to keep, you also got to look at protecting your records. Make sure you make copies of it, because, you know, a receipt that's faded out, they're not going to accept that, guys. They're not going to accept it. And so therefore, you might have a bona fide deduction. You might have actually went to this convention for your business, which I'm going to talk a little bit about that in just a minute when I talk about supporting documentation. You might have proof that you went there, but then this receipt is faded. And so it's a contradiction. Yeah, you know, where you got that from? You could have picked it up off the street, you know, and a lot of business owners, especially those who are in network marketing, or you can say direct sales or internet marketing, things of that nature, they're not keeping the records correctly. And you know that your IRS got their eyes on you, because basically you're out there recruiting, you're building business, you're meeting people, you're writing out lunches and all these different things that you're doing. But when they ask for the proof, when you're driving back and forth to meetings, you're doing home presentations, you're going to hotels, you're going to weekly events, monthly events, you know, and so basically you don't have the information to prove it, then you lose your bona fide deductions. The first thing that I want you to think like is a prosecuting attorney. You understand? Think like a prosecuting attorney, that whatever your expense is, you need proof of. You need exhibit A, you need exhibit B, and if you can have exhibit C, let it happen. I'm gonna give you an example of that, but let's continue on. I tell people to keep your records for at least 10 years. Why 10 years, Gene? Is because if the IRS went back on you 5 years and you don't have proof of those deductions, guys, then guess what? You lose your bona fide deductions. Now, you can only go back 3 years to amend, but they can go back as much as they want to on you. That's just it. And sometimes people say, well, 7 years. Sometimes people say, well, you know, no, they can't really listen. In my experience of 20 years, I have actually seen the IRS go back on somebody 7, 8 years. And then they did not have the information, whatever excuse they came up with, and they lost their bona fide deduction. So even though you're out there working hard, salute to you, going out there building your business, I want you to think smart. I don't want you to lose your bona fide deductions. So let's talk about timely, which is one of my pet peeves, timely kept records. You should record the elements of an expense of a business used at near the time of the expense, or use and support it with sufficient evidence. A timely kept record has more value than a statement prepared later, when you generally lose lack of accurate recall. Okay, so let's talk about that. Let me finish this up. You don't need to write down the elements of every expense on it, the date of the expense. If you maintain a log on a weekly basis that account for use during the week, the log is considered a timely kept record. Log, write that down, log. If you give your employer, client, a customer expense account statement, it can be considered a timely kept record. This is true if you copy it from your account book, your diary, your log, your statement of expense, trip sheets, or similar record. Proving business purpose. You must generally provide a written statement of the business purpose of an expense. However, the degree of proof varies according to the circumstances in each case. If the business purpose on the expense is clear from surrounding circumstances, then you don't need to give a written explanation. So let's go back and talk about timely kept records. What is a timely kept record? Let's say, I want to take an example. Let's use an example of you going to a big convention. You know, basically, you know that you're going to Las Vegas for a convention. Let's say you're going to Las Vegas for a convention in January, and you're definitely in some network marketing business or internet marketing business, or maybe you're with ClickFunnels and you're going to go to Russell Brunson conference in March, and you have so much documentation to prove that you're there for business. Because number one, exhibit A is going to be the flyer, the advertisement that you're going to see, whatever information they give you, the website. Go to the website, print that information out to show that is the purpose of you going. You're going to this conference for dust, and dust. Okay. Then, of course, the ticket that you buy. Okay. Make sure you make copies of your ticket before you just hand your ticket over to the person at the door. When you go to the convention, make copies of your ticket. Then you want to make sure. So exhibit A is the flyer that represent the event that you're going to. Exhibit B is the ticket. Exhibit C is going to be my appointment book. My appointment book, when I go to the year at a glance, which you can't see this because of the glare, but when I go to the year at a glance, it's going to have who, what, when, where, and why. It's going to have that I'm going to Las Vegas. The purpose is the business training. I'm going to be learning whatever. I'm going to document that. Okay. And then I'm going to make sure that I prove that, because this is what the IRS is doing now. Let's say the convention is, let me give a date. Let's say that the convention is maybe Thursday, Friday, Saturday, and Sunday. Okay. You flew in on Monday and you stayed the whole week, and then you left on the next Monday. Well, what the IRS is saying, well, really, technically, you only did business Thursday, Friday, Saturday, and Sunday, because this is what the dates state, that you was there for business Thursday, Friday, Saturday, Sunday. So Monday, Tuesday, Wednesday, we're not going to give you those deductions. We're not going to give you the hotel fee. We're not going to give you this, that, and the other. What you have to now do is prove that when you got there Monday, and I hope this is helping some people out, that's when you want to go ahead and make some business appointments. You want to sit down and do some business lunches. You want to do whatever, if you want to make sure that you get those dates that you came in advance. Otherwise, they just look at it as personal. They only look at the date that that event started from the date that it ended as business. And so I hope that you understand that. So what you have to do now is think, okay, if I'm coming in on Monday, who am I sitting down with? Who am I talking about my business? What am I doing? So therefore, you can make sure that you get those dates. Otherwise, you're only going to get the dates that it shows that you had the business meeting. Exhibit A, you have the flyer from the conference. You have the advertisement from the conference. You have the ticket, Exhibit B. Exhibit C, I have it in my planner. I make copies of this. So when I do, and I'm going to show you right now, and there's so many ways to document, but I just want to show you something very, very generic, very, very generic. You have a log, just like a daily expense sheet. You see what I'm saying? A daily organizer sheet. It has my appointments. It says who, what, when, where, and why. When I go out of town over here, it has, travel expenses, has all that information, guys, that I'm able to record. So this is what you have to think about when you are building your business. You need to make sure that you document it. Now, of course, they have programs like QuickBooks and other materials that actually keep records for you, that you can go in and put the information in. Whatever it says, it can be a date, a log, it can be a calendar, it can be a journal, it can be various different trip sheets, as long as they have some form of documentation. Now, what you have to also understand is that you have to make sure, guys, that when it happens, you record it right then. Don't say, okay, I'm going to get it later on. I'm going to try to backdate later on, because this is where you lose your bona fide deductions. Because, I trust a short pencil over a long time memory any day. So you have to make sure that when it happened, take time. If you have a computer program that works for a lot of people, sit down, type the information in, your mileage, your meals, your entertainment, your travel, your appointment, who you had appointment with, things of that nature. Now, here's another thing too. I'm taking that example of me going out of town. Let's say I had a convention. I was flying in Thursday. I flew in Monday, I said, but the convention did not start Thursday. I can send an intent to do business letter. I can send an intent to do business letter by email. Basically contact someone there, meet some people. You know what to do. I'm not going to give you all that. But then when you get a name and number, you can send an email address, get their information. You can send an email. Hi, Gene Davis. I'm so excited to be coming to Vegas. I look forward to sitting down with you on Monday to discuss the business at hand. Whatever it is, now I have proof that I'm flying in Monday because I'm meeting some people for business. This is what you got to think about. You got to think ahead. Don't just think that, oh, well, I was there for a convention the whole week. But clearly they can see on the program that it started Thursday. You got to think about, what can I do legally? Write those words down: legally, ethically, and morally, to make sure that I do not lose my bona fide deductions. Now, what I do is I believe in keeping a journal. This is a daily expense that basically you have your travel, your meals, you have your mileage, you have your entertainment, who, where, why, you have your meals, you have other business expenses, and then like education, dues and fees, supplies, postage and shipping, business gift, printing, home-based business expenses, business leads, gas, oil, lube, wash, repairs, all that on a daily basis. That if you have expenses that you want to record, you will write that down, but also you would make a copy of your receipt and also attach the copy and the receipt there, just in case the receipt faded out for that day. That's okay. You got a copy of it, and you can say, well, tell the auditor, hey, look, the receipt faded, but as you can see, here's the copy of the receipt. You got to think like a prosecuting attorney. That's what you got to do. And then this is an example of a monthly expense organizer form. Okay, I'm going to do a webinar that I'm going to have all this stuff loaded up so you can actually see it. But this is an impromptu that it just made me decide to do this, because I had some people calling me like, Gene, I don't know what I need to do, how I need to do it, why I need to do it, show me what I need to do. So I just wanted to go over a few things. Now, this expense organizer form, it basically have a record from January to December. It has your totals for each month, and then you can do a yearly total. And some of the things that you have is, of course, your overnight transportation, your meals, your expenses, your mileage, your insurance, your taxes, your utilities, pension, advertisement, supplies, seminars, dues, banking fees, accounting fees, labor, renewal fees, business gifts, postage, shipping, repairs, maintenance, communication, interest. You can also put workshops, seminars, trainings. You can add whatever. What the IRS is looking for is a journal of your account. That's what they're looking for. They're looking for in a journal to prove that you're actually keeping records in a timely fashion. They do not want a book where you've wasted coffee in the book. You got mismatched ink because you're trying to prove that, you was recording on different days. I've seen it. I told you I worked as an auditor. I've seen everything underneath the sun. People trying to figure out, okay, what I need to do. And here's another thing. When you go to lunch with people, and I'm just giving you a little hints. I'm not going to go over everything because, like I said, I did this training and it's in the back office of the Wealth Creator. And if you want to become a wealth creator and get these trainings and so much more, just type info below and you can get the information. Those on YouTube, just inbox me, send an email to me. Those on LinkedIn, do the same thing, and I get the information to you. So basically, let's say I went to lunch with someone. What the IRS want to know is who was the person, where did we go, what was the purpose, and then I'm able to record my meal, my show, or what have you. So let's say who, Gene Davis, where we went to, Houston's, why, she's a possible business partner. And then, of course, I would put how much the meal was. And if I decide to go to the movies, if I decide to go to a play, whatever the case may be, the IRS says as long as I conduct business within 24 hours, my entertainment expense is a write-off. So you have to understand what the IRS say. If you don't know, that's what Gene Davis is here to help you out with and show you where the publications, you can go to and read on the IRS website. All the information is there. So you want to make sure you know who, what, when, where, and why. And then on the back of the receipt, you want to write the person's name and put who are they, what their name is, Joan Clark. This is a possible business partner, business meeting, whatever. Make sure you make a copy of the front and the back and attach it to it, because you want to make sure, even when those who are taking out people on a group setting. I love this. I remember that I went out with a couple of guys who was a business partner before, way in the past, and they had a big lunch, and basically they had a sign-in sheet. They had a sign-in sheet for everybody that attend that luncheon, so they could keep it for their records, so they can have they made a copy of the sign-in sheet. They was able to make copies of the receipt, and they attached it to the back of the sign-in sheet, so in case they ever audited, they would have the information. And of course, you will break it down in categories: your mileage, your meals, your entertainment. You know, meals can be treated as a form of entertainment as well. You know, those types of things, those things can be written off, but you want to just think like Exhibit A, Exhibit B, Exhibit C. You want to make sure you have as much proof, and you want to make sure that you write down the people's name. Don't throw away your prospect list. Don't throw away your contact list. Make sure you write these people down, because listen, now the Internal Revenue Service, especially with those who are in direct sales, internet marketing, any kind of marketing or what have you, they want to know who are your prospects, who are you talking to, who are your customers, you know, and you should have proof that you have a strong customer base and you're running your business like a business and not like a hobby. And a hobby is somebody that do something every now and again. So therefore they get paid every now and again. Okay. So we want to make sure that we run our business properly, so we don't have to worry about, you know, am I going to lose my bona fide deductions? Now, I said timely kept records. If you don't have complete records, the point blank is you can lose your bona fide tax deductions. I can go into all that. I don't have a lot of time to do that. But like I said, I did this training before, and you can actually, you know, go back and get that training. Now, what are accurate records? You should keep the proof you need in an account book, diary, log, statement of expense, trip sheets or similar records, which I just showed you. You should also keep documentary evidence that, together with your record, you heard what I just said, will support each element of expense. As what I just said, this is coming from the IRS website here that's breaking this down, of being a business owner, explaining to you what kind of records you need to keep. So you need to make sure you keep the proof you need in an account book, diary, log, statement of expense, trip sheets, or similar record. You need to think like a prosecuting attorney, like they said, have evidence that, together with your record, would support each element of expense. Documentary evidence is receipts, counsel checks, bills to support your expenses. Okay, people will ask me, your expenses other than lodging is less than $75. You don't have to keep those receipts. Listen, anything less than $75, you don't have to keep it. You document it. But guys, listen, today, in this world today, the way the IRS is, sometimes I'll just keep everything that I can. Everything that I can, just to make sure that I don't have to worry about losing my bona fide deductions. Now, adequate evidence. Let's talk about evidence, okay? I'm talking about keeping timely records. That is the most important thing. I can go over a whole bunch of training, but tonight I want you to think about keeping timely records, thinking like a prosecuting attorney, having evidence, documentary evidence, you know, as they said, you know, make sure you have evidence to prove your expenses, you know, no backdating. You don't want to do that, because you know, right now, a lot of people, what I see when people are building a business, all they're thinking about is making money or earning money. You understand? That's all they're thinking about. They're not thinking about, oh, I need to keep this. They'll keep all the receipts, but get this, they don't have any proof. They don't have any evidence to support that I went to lunch. You just got a receipt. That's not going to work. Let's talk about what's adequate evidence. It says documentary evidence ordinarily would be considered adequate if it shows the amount, date, place, and essential character of the expense, okay? For example, a hotel receipt is enough to support expenses for business travel if it has the following information: the name and location of the hotel, the dates you stayed there, separate amounts for such as lodging, meals, telephone calls. A restaurant receipt is enough to prove an expense for a business meal. Listen to me, if it has the following information: the name and the location of the restaurant, the number of people served, the date and the amount of the expense, the purpose of the meeting. You understand? If a change is made for items other than food and beverages, the receipt must show this and why was the change made. Now, what's a supporting document is a canceled check together with a bill from the payee. Ordinary establishes the cost. However, a canceled check by itself doesn't prove a business expense. That's why you need that receipt, right? Duplicate information. You do not have to record information in your account book or other records that duplicate information shown on a receipt, as long as your records and receipt complement each other. It must complement each other, like the shirt and pants go together, the hat and shoes, the belt and shoes go together. It must complement each other, your expenses. So you just got to think like a prosecuting attorney. Just collecting a bunch of receipts with no names, no purpose, no who, what, when, where, and why, you're going to lose your bona fide deduction. How you doing, Claudia? So I want to make sure that you understand that. It's so, like I said, I gave you an example of a meal that it says who, where, why. You know, you put your receipt, it has the date, it has the time. You want to get the name, especially when you're doing group meetings. I know a lot of people who do group meetings have breakfast and have lunches, invite people over to have a business presentation. Get a sign-in sheet. It makes sense. Also, too, you might want to record some of these events. Have somebody record it so you can have proof. And just always think Exhibit A, Exhibit B. You want to have proof of your expenses and that you're operating your business the way you should be operating your business, and you're not running your business like a hobby. That's what I want you to think about. What's another thing? I can go more into breaking down these expenses. Yeah, but my main thing is, and I can get into auditing and all that stuff, but I don't want to get into that right now because that's in the back office. A lot of this stuff is in the back office. You say, Gene, what back office are you talking about? I'm talking about the Tiffis Wealth Creators. We have all this information that I'm going over with you. We have that in the back office of where I did a big time training breaking this down. The main thing that you need to know is that as a taxpayer, you got to make sure that you're keeping records. One of the things that prompt the IRS for an audit, I told you I was going to tell you that, is that when people, they itemize high, you know, that Schedule A, they itemize high. They're writing off, you know, under their job, unreimbursed employee expenses. Of course, they're getting their mileage, and you commuting back and forth to work is not a mileage expense. That is called commute. That is not a mileage expense. That's not a business expense. That you cannot get commuting miles back and forth. That would be everybody in the USA being able to write off their mile. It must be ordinary and necessary in order for you to write that mileage off if you're working a job. For example, what do I mean by that? Let's say I am a district manager for Starbucks and I work in a Buckhead location. And that is my main office. My main office is Buckhead. But I come in, hi Kiana, I come in Tuesday morning and say, Gene, the Alpharetta location, okay, is short. We need a district manager to go to Alpharetta. Well, my home is Buckhead. That's where my home office is with that company, but they need me to go to Alpharetta. Now, from the home office going to Alpharetta become business mile because it's ordinary and necessary for my company to go to that area. Not you driving back and forth to work. It's not that way. You know what I'm saying? It's different if you're a subcontractor. It's different if you're driving for Uber, which your mileage is very different. But when you're just going back and forth to work every day, no ma'am, no sir, it's not legally, ethically, and morally sound that you're going to get your commuting miles. You can Google that yourself if you don't believe me. It must be ordinary and necessary for your business. I'll give you another example. Let's say that I am working in, let's just say a corporate office in Texas. And they need me to come to Atlanta to run that business. They need me to come run that business. So that is not normally my home is in Texas, but I need to go to Atlanta. Now this become, and I'm an employee. I'm talking about not 1099. I'm talking about I am a W-2 employee. And I have to either fly there or basically whatever. Then when I get there, I got to drive back and forth. Listen, if they don't reimburse me these expenses, then now I can get these deductions. I can get my hotel, I can get my meals. Some people get reimbursed. They're on a meal plan. If you're on a meal plan, you can't carry those meals. I can get my dry cleaning, I can get my hair, all that stuff. I can get clean, get my hair done, my nails done, write that off. When I'm talking about being an employee, you can get these things. But driving back and forth to work, I don't know who told these people out here, they said, stop going on what they said, because they will get you on thousands and thousands of dollars, and they ain't gonna be around to pay it either. You want to make sure that you get advice for those who credit it, this is my life. I'm an ex-IRS auditor. I teach and train this stuff all day, every day. You understand? So I want to make sure you understand that I know what I'm talking about. I was trained by the IRS. I was trained to audit your tail if you're not doing your stuff right. So I'm just telling you right now what they're looking for and what you can't get. Now, some people think even, let's take it to, I'm only going to go about maybe 5 or 6 more minutes because I can go on and on and on. But my main thing is keeping accurate and timely records. Thinking like a prosecuting attorney, making sure you document the expenses when you have total recall when it happens, understanding what you can write off and what you can't write off, understand why you can write it off, understanding your rights as a taxpayer, understanding what to do if you ever audited, what causes an audit. We talk about all these things as a wealth creator. It's in the back office. Our wealth creators, they're not walking around dumb. They're not walking around ignorant or whatever you want to say. They understand. All they got to do is log into a back office and get the trainings that we're constantly updating, not just taxes, but finance, wealth creation, debt eradication, investing, branding, coaching, mentorship, business building, all that stuff. We're loading that information in their digital library so they have it. And then on top of it, because the information is so good, it's so gangster, they're able to go ahead and promote it to their friends and make money from doing it. It just makes sense. So if you want to know how you can get this information and have it up to date and be able to qualify for free consult to help us, to help you to guide you in your business, then just type info below and we'll get information. When it comes to your mileage, let's talk about that, because a lot of people, they're losing their bona fide deduction with their mileage. How you doing, Joan? They're losing their bona fide deductions with their mileage because they don't understand what is it, Gene, that the IRS want when it comes to my mileage, and what can I claim as a business owner? So there's 2 things I want you to understand what the IRS looks for is, number 1, again, who, what, when, where, and why. Who did you contact? What was the purpose? And what was the destination? They want to know, is this auto, you want to make sure you're saying auto A, B, auto 1, 2. If you got 2 vehicles, if you only have 1 vehicle, you can say auto A or auto 1. They want to know where did the odometer begin and where did it end? Was it personal? Was it business? Now, let's take an example of, let's say that I'm a network marketer. And I like using it because a lot of network marketers are my clients. I train a lot of network marketers. I go to the big conventions in Vegas and train you guys. I'm on stage right along with the big guys training on the tax advantage of business. Okay, so let's talk about the mileage. What you have to understand is there's something called first stop, second stop. Okay. The first stop normally is always personal. So let's just take it where I decided to leave my home, and every day my job is to go out there and meet people, to network, right? We understand that. That's the job. My goal is to network. If I don't talk to people, my business dies. The Internal Revenue Service understand that. So you need to make sure you're getting names, you're getting emails, you're getting telephone numbers. You keep this information, you document it at the time you can recall it, where you're putting it in your journal, you're putting it in your calendar, whatever, you're getting this information. You want to make sure that you're doing it, right? You want to do it when you can recall it. Right? You want to get business cards. Keep the business cards. Don't throw the business cards away. Even when you get the business card and you just prospect somebody and you got the card, go in your calendar, write down prospected Joe Black, when, where, whatever. So let's take it from someone leaving the house. You left the house. You stopped at Starbucks. Okay. Now, what the IRS want to know, what is your purpose of stopping at Starbucks? That's the first thing they want to know. Well, if you say, well, I just went to Starbucks to get coffee, then that's going to negate point 2, right? Or stop 2. No, I'm stopping at Starbucks because I'm going in there to meet people. I'm a prospector. I'm prospect. I know a lot of business people are in Starbucks, baby. They're in the Barnes and Noble. I'm going to go to Starbucks. So my main point is I'm going to Starbucks to meet people, but I am going to grab a cup of coffee because I so happen to be there. And I don't want to be walking up in someone's establishment and I'm not at least, contributing to it because they can kick me out or something like that. I'm just giving you an example. So you got to know when you're talking to the Internal Revenue Service what they're thinking. What's your purpose? Because if you just go and you went to Office Depot to buy supplies, you went there for supplies. You can't say, oh, I went there to prospect or whatever. But if you went there to prospect, I went there to meet some people because I know business people hang out there. And I so happen to buy some supplies too. And I'm going to get those supplies as well. So let's take it on this mileage. I left my home. This is the first stop. I stopped at Starbucks. I met Joe Black and I met Karen Clark. Okay, Joe Black and Karen Clark. This is how we're going to do it. My odometer, let's say I put 001. Okay, Starbucks was 3 miles away. So what's that, 004? I'm just using an example. Who did I contact? I met Joe and Karen. Okay, what's the purpose? They're going to be possible business partners, and my destination, when I got to the first part of it's going to be, who did I contact? I didn't contact anybody. I did not. My purpose is to go prospect. The destination is Starbucks. That's the first line. When I get to Starbucks, the first stop is going to be personal, 3 miles personal. But while I was at the Starbucks, I spoke to Joe and I spoke to Karen. So I contact Joe, I contact Karen. What is the purpose? Possible business partner, or PBP. You can have a little star, a little code so the IRS know what you're saying when you write that down. And now from Starbucks driving to work now become business miles. You understand what I'm saying? Because my purpose was to go to Starbucks to meet people. Now coming home, I could do the same thing. I could stop at because somebody was asking me, what about if I go to my job, Gene, and I prospect a lot of people? Baby, the first stop is going to be personal. Let's just keep it that way. It's going to be personal. But when I leave my job, I stop somewhere and I want to go meet people. You're supposed to be prospecting people every day anyway, right? So whatever you're doing, if you want to get those miles, remember the first stop is going to be personal. The second stop, I meet a couple of people. I get their name, their PBPs, possible business partners, and now I'm going back to HO. HO is the home office, which is AKA your home. This is what the IRS want. This is what they want. They want a journal. Let me see if I can. You see that? You see that down there? Maybe not that good, but boom. Can you see that really good? Bruce, are you watching? Travel, you see that? Now let me come over. Trying to make sure, where is it located? Oh, there we go. Yeah. And it's slide. So you see that says auto, guys. I'm gonna have to come back and give some, but this information, who, what, when, where, why is there. And you just want to make sure, and I'm going to do a webinar so you can actually see the slides, because I'm just giving you an example. But you can have a regular notebook, a regular composition book, and you could create where your odometer begin, where it end, the first stop, second stop, but also too, how can we think like a prosecuting attorney and have exhibit A, exhibit B to support my mileage log? Is called oil changes. You get oil changes every 3,000 miles, right? If you're doing it right. Some people go further than that, but on the oil change, it has where my odometer is. So it can pretty much gauge if I get oil change throughout the year, it can show that I can attach that to my mileage to show that, well, here's proof of my oil changes and where my odometer was. And they can estimate throughout the year what you did. And then you could do a final oil change at the end of the year and have proof of where it ended on your miles. Also, guys, you want to make sure that you're writing this stuff down and you're keeping track. You're writing those names down. You're making sure you record the odometer. You're making sure you do it, because I'm telling you right now, the IRS, from my experience, from what I've been seeing, they have been denying people mileage because they're not keeping records. They're not thinking like a prosecuting attorney. They're just thinking, oh, I can just write down my miles and that's it. No, you must write down, is it the auto A or B, 1 or 2, where the odometer began, where it ended, who did you contact, what was the purpose, where were you going, was it business miles, was it personal miles? You must do this. Now, the IRS has something called a 90-day rule log, which means that you can take the highest traffic of the highest months of your travel, and you can record it 90 days straight. That would tell, and multiply that by 4, and that would give you what you generally went in through the year. Now, some people, some IRS auditors don't even know about that, and we can give you the codes when you're in that back office of Wealth Creator, give you the section codes, the IRS codes that give that information so you can have that. What we want to make sure is that you think like a prosecuting attorney and you're keeping records the way you're supposed to keep records. You keep the receipts the way you're supposed to keep the receipts. You put the names down, you put the date down, you put the time, you put the purpose and what you're doing. And I just want to make sure you understand, because so many people are contacting me on a daily basis, especially around this time, and they're trying to get their records right. They don't know what they're supposed to be doing. They don't know what they can write down. And so now they backdating and trying to get the stuff together when it just makes sense to record it when it happens. Now, I was talking about the mileage, who you're talking to, get their information, record their name, make sure you get their numbers, get their email. I love email, man, those who are internet marketers, guys, you got a lot of proof, man. Not saying that those who are network marketers don't, but it's all on, you can print it out. You got your prospect list, you got your email list, you got all this stuff already there. You could go through, do a report, boom, print that stuff out. It's already there. You got your Facebook advertising. You got proof of your advertising. They keep your YouTube advertising. You got proof of your YouTube advertising. You're having business meals. You're going to conventions. Print that stuff out. You're going to go meet with your team. Send an email to your leader, whoever you're working with. Put that information. Hey, look, I look forward to seeing you in Texas to do the training. I look forward to learning what I need to learn for my business. Hey, look, you got Russell Brunson. You're going to the seminar in March. Look, make sure you send an email to Russell. Hey, look, I'm so excited to be there, man, in Las Vegas, man, to learn about dust, or in Orlando, Florida, to learn about dust. You have to always think like a prosecuting attorney, because that's what the IRS is looking. I like to say you're guilty until proven innocent. Really, you're guilty until proven, because the IRS knows that people will make up deductions, guys, because they understand something about, I qualify for some business deductions. So I understand deductions, but can we do it legally, ethically, and morally sound? That's the main thing. Can we make sure we keep records the way we're supposed to keep records? Now it was something else that I want to give you. Are we clear about that? I hope that I want you to just rewind, and you can go back and watch this because I don't want to go over everything. Just record when it happens. Keep timely, accurate records. Make sure you have your monthly expense organizer, daily expense organizer. You have your calendar. Everything is supporting documentation. Everything that you have here is on your supporting documentation. You keep your receipts. When you go to dinner, you get their names. If you're having group meetings, have a sign-in sheet. You're using your house, have a sign-in sheet. You're doing business presentation. You have a seminar, have a sign-in sheet to prove. You got your hotel, you got your advertisement, you got all this stuff. Just think like a prosecuting attorney. Break it down in folders: mileage, meals, entertainment, travel, supplies, expenses, training. Just get some folders and keep those receipts together, or get those ones that you can put it in, like what is it called, the ones that it's like look like where you could put an envelope, you could put them down in, and you just keep records. And every month anyway, you should have a month in. Every month you should have a month in. What is a month in? You're able to calculate how much did we do in our mileage, how much did we do with our meals, how much did we have for our supplies, how much did we pay in advertising costs. If you're building a business anyway, you need to know how much you're paying in expenses to grow your business. It just makes sense. Some people think, I have people who have said, oh, my business, I earn over $500,000. No, that's what your business, but when they put all their expenses in there, they really took home way less than that, So you have to be able to record it so you can see where you're going and what you need to do. Now, what I want to say is, if you need help, if you want a free consult, you can give our office a call at 678-457-9493. Again, 678-457-9493. I'm told I speak very fast, so I will slow it down. 678-457-9493. And I will put my information in the comments and pin it. But what I want to make sure that you do, if you're unsure, guys, about your records, we're available. We'll schedule a consult with you, a free consult, just to answer a few questions. But here's the best thing that you can do. The power of being a wealth creator. We are Tiffis Wealth Creators. We're an inner circle and mastermind coaching program. Our program go over this information. We cover all things taxes when it comes to business taxes, how to be audit proof, what to do if you're audited, the most common tax deductions that you qualify for, tax tips, end of the year tax saving, documentation equals representation. We have so many subjects that we cover and still covering on taxes, as well as finances, as well as investing, business branding. We have so many, over 60 plus topics and growing, that we will have in the back office for you. We're brand new. We just launched in October. We are a learn and earn establishment. We are about helping you to win in the skin you're in, because we want to be able to tell the stories of lives transformed. And a lot of people don't know about taxes. It's a lot of information, but you got to be smart. If you're a business owner, you got to be smart. You got to keep timely and accurate records. When you can recall it, you write it down, you put it in a computer, get your software. If you're someone who don't want to write it down, get a software, guys, that you Google some software. I did a training. Oh, my bad. That was in the Wealth Creators group. I thought I did it on Facebook Live. My bad. That was in the Wealth Creators group. That's back there, that I even gave some recommendations on some software that you can use. But if you want to become a wealth creator, I'm going to drop the link below. I'm going to pin it. I'm going to put my telephone number there if you have any questions. But I just want to let you know that the audits are up. A lot of business owners are being audited now. And basically, how does U.S. Congress raise income? They pressure the Internal Revenue Service to do audits. You understand what I'm saying? And so if you're not keeping records when it happens, you're not documenting your expenses, You have no proof of the documentation. That was the last thing I wanted to say. Somebody asked me this the other day. They said, okay, I listened to one of your trainings and okay, I'm documenting my mileage and things. What else can I use to prove my mileage? Google, right? Google Maps. Type in the address from where you're going to, from where you are to where you're going. It proves it. If you're driving to Houston, Texas, it's going to say how many miles from Houston, Texas. If you're going to a business meeting, you're going to a business convention, that's 100% tax deduction right there. So, you know, you can Google. I mean, I love it because it's going to prove that this is how many miles you went. You might just have big miles driving back and forth from conventions and things of that nature that you can definitely record that and get that as a tax deduction. It's just about being smart, guys. It's just about being a savvy business owner. Yes, you want to make your money. You want to make sure that, you know, you're getting your coins out there, but, you know, we want to make sure you keep it. We want to make sure that your business grow, and we want to make sure that you do not lose your bona fide tax deduction. So this was just a little tip. I would say 2 tips that I gave you tonight. It's a lot of information. As you see, it's all, I wanted to go 30 minutes and I can never, Bruce, I can never go 30 minutes, honey.
It's a lot of information.
It's a lot of information, huh? I can never go 30 minutes because it's so much information that I just want to share with you. But that right there, those 2 things right there can help you get your life in your business. It can really, really help you keep your bona fide tax deductions and protect yourself. Remember to think like a prosecuting attorney. Make sure you have supporting documentation. Make sure you record your information at the time that it happens when you can have total recall, and make sure you answer the questions as you did in school. Who, what, when, where, and why. If you can answer those 5 questions and you have proof of it, then guess what? I guarantee you keep your bona fide deductions. So guys, I want to thank you so much for watching. If you have any questions, I hope that this helped you. Let me go ahead and put the information here. Put this here. Did anybody have any questions before I go? Okay, I'm going to pin this information for you guys. Okay. All right, so I put this information here for you, and I will pin it in the comments. But definitely, guys, you're able to go to the website. There it is. I'm going to pin it right now. Boom, boom, boom. It's pinned. So you can go down to the comments. I have the website there. If you want to get more training, you want to make sure that you get all the information that you need. And guys, listen, you want to consult and you need help. That's what we're here for. We're here to help you win in this game you're in. My name is Jean Davis. I am a wealth creator, and you're a wealth creator too. Thank you so much for watching. We'll come back again with more tax tips like this to help you to keep your bona fide tax deductions and to help you grow your money, because we all know it's not about how much you earn. It's about how much you keep. Let's keep our money and grow it as well. Thank you for watching. God bless you. And I'll see you in the next video. Take care.